brought to you by Cryptopocalypse Now. This is a MarketSpy signal reading tutorial, and for this session I have chosen the dragon, the beast, the widow maker, the British pound, Japanese yen pair, traded on Wanda. Now the reason I've chosen this as an example is because I wanted to find an asset that is reputable for its volatility, extreme volatility, unpredictability, and I wanted to demonstrate the accuracy and also some of the filters that are now in place in the latest version of Armageddon that help you out on your journey to successfully trading volatile pairs such as the British pound, Japanese yen, the beast, or things like Bitcoin. We're looking at the 4-hour time frame, which I recommend everyone use higher time frames for obvious reasons. It's very easy to read, and also you don't have to stay glued to your screens 24/7. But it's a perfect example that an untrained eye would look at this and say, okay, the famous GPS buy signal is a complete failure over here, even though you still got away with a few pips if you instantly bought and held for a little bit. They did not exactly play out as their intended purpose, and I'll tell you why and how you can successfully understand and trade these volatile pairs with precision regardless of what the software tells you. So on MSX and MarketSpy Armageddon, in this video we will look how they both interact with one another and how they watch each other's back. So with the latest uptick, this crazy bounce over here, continuation of the trend, we can see that this was almost certainly unpredictable, and if you had entered on the white diamond, the crushing force that is our white diamonds over here that tell you that this is probably a good place to look for short. You got away with a few pips, nothing major, but that's nothing to sneeze at. 1%, 1.6, it's still good, maybe even less. Let's say 0.5, still good. 7 days of waiting on the 4-hour chart. You have the patience for that. Congratulations. Using the basic enter on the signal strategy, place your stops on previous candle high to avoid getting knocked out, and hold it all the way down until you're comfortable exiting the trade. But we will see how these signals tend to appear in places maybe not, like for example over here it's missing, and we'll explore exactly what is going on in this case and how you can avoid false positives. Now in the previous version of MSAR, MarketSpy Armageddon, we had way less signals. The chart was a lot cleaner, but it was also not satisfying to those people who had the itch to trade frequently. And so with this update we wanted to give our users something that they can choose to ignore or take the signal as is, and they have a complete freedom now to take frequent trades, scalp trades and whatnot. And here in this video we'll explore what is happening here and how these waves are not linear like this. They don't, sometimes they never come down, and there's a reason for that. So let's start from the very recent price action over here. First of all, volume on this spike over here, we can see that this was going to continue. Now let's begin with the GPS signal. Let's assume that you're somewhere here and you saw that this has been extremely oversold and you're at the bottom and you want to long. The reason you wouldn't long and ignore this signal is 3 things. A, you have money flow indicator, the Barmageddon as I like to call it. This bar at the bottom, the Barmageddon, is completely red, and you can see how the cloud the money flow cloud is also red, meaning money is still leaving the market. There's still not enough interest, not enough buyers. Now, it doesn't mean that when it's in the green, it's going up. It can be green and still going down. It just shows that there's money involved and heavy exchange, heavy trading is happening. When you're in the red like this, first thing you should look at before jumping on this GPS green pulse buy signal is you need to ask yourself what the current trade is. And what we can see over here is that since this price action started to go down, we broke below the VWAP line. The average price in the last 60 days for this particular asset is now trading below its average price. We're below the baseline. Our aqua blue baseline is now yellow and it hovers above the price. This is price action. We have the yellow X continuation. It usually happens when we break below the baseline. We have the triangle pointing down, which means we broke through this our baseline, and now we're trading below it. So what this means is that there's a momentum, and I've said it before from the first day, from the day one in the video. I said that if we're below this baseline, then we are only allowed to short. So we should be looking for short signals overall, especially after a rise like this. We're not using any levels here right now, any symmetrical triangles or channels, bearish, bullish, any of that stuff. We're just simply looking at the indications. And since we went below here and we see the way that you can gauge this momentum is that when the white and blue lines are wide apart, there's a significant space between them two. This is how you know the strength. This is one way you can measure the strength of the momentum, is when there's a separation, a degree of separation that's usually wider than, let's say, over here, or even over here, or over here. These are like very weak attempts to continue waving, so to say, in the direction where it's pointed at. So we have added one powerful signal to Armageddon in the latest version, and this is the baseline 2. Baseline 2 type is a further confirmation of the trend, and you can see that right over here we started to experience, we're now in the red cloud ever since over here. So red cloud below baseline 2, which is customizable. You can actually go, and depending on what market you're trading, you can select your preferable baseline or moving average that is included over here. We have the famous Kijun, for example. There it is. Kijun broke over here. It turned red. So green, this is your trend confirmation. Everything is looking peachy. As soon as we came down here, we broke the trend. Below it, even if you don't get a diamond signal, you can determine, like we have the shuriken over here, the weakness was detected on this candle. Then we have the red X, extreme price action weakness. And we have this got changed from red to yellow to make it stand apart in the latest update, so please update your MSAR to reflect the change. But for your visual guidance and understanding, this basically when the EMA crosses, and you can see how our blue wave over here, the magnetic ribbon, is, as I call it, turned into yellow, and this is pissing away the price action. That's why it's yellow. It's like piss poor price action. And so you have a staggering amount of indications over here saying that, look, this is going to be extremely difficult to reverse from here, and we're entering some momentum that will carry us further down. We're separating away from our baseline 2, baseline 1, and the purple indigo VWAP line, which is never a good sign. So when you see these white X signs, what they indicate during a time like this is that the momentum on MSX, when trying to reverse, when you're trying to front run it, you think it's going to from here down, sideways, and you think okay, here it is, it's going to go up. Since we have the buy signal, most likely it will fail. Use the environment to identify whether this is true or not, and do not trust one signal without the other. MarketSpy ARmageddon and MSX should always be in confluence together. So at this stage, when you saw these two white X's, this means that the momentum is breaking. As you can see, we have the C dot. It's a crossing dot, turns green when the momentum is attempting to reverse. However, we're being stopped by the white X, which is saying that no, it can't. It just doesn't have enough ignition. There's no fuel to continue swinging up here. So it says that we're most likely entering a dangerous territory where we're lacking power to do what we're trying to do here. And of course, only after all of this, if I saw this white diamond with the red X and EMA cross the not equal yellow crossing sign, is basically EMA 5 crossing EMA 10, or whatever it is programmed as the number here on these ribbons. When that happens and you see the diamond, I would not have shorted it over here. Maybe if I like to play high risk games, maybe, but over here would have been a very perfect opportunity for me to short. And I know this how, because we're here below all of our trend lines, support lines basically. So this over here, this whole thing to take this 1% move down would have been perfect for me personally, and I would have taken this trade as such. And then of course, this pair is known for volatility. As I said, we can see an example of how it quickly changed off of this one candle afterwards. Now, this is discretionary, and you would have exited here, or you would have placed your stop and broke even on this move up. So the baseline confirms that we are out of the woods once price is above baseline 2 and baseline 1. Let's reset to the default settings, because I find the default triple EMA as baseline 2 acts very nicely, showing us that, you see how we're still in the green here? It's showing us that even though we're in a downtrend, we're starting to see signs of a potential reversal here, since we're entering the green even though we're still going down. So I don't know if that makes any sense, but the baseline is a very powerful confirmator, so to say, the confirmation tool for us to take a look at. What is happening here? On this signal, this is for sure a trading opportunity right here, since we broke below our baseline, and baseline 2 is in the red cloud. The red cloud is here, and so this trade is a go all the way until here. Another 1% move on this Forex highly volatile pair, and we exit on the green square or on these guys over here. And so just another example of how the baseline is there for a reason. Price action, notice let's go stage by stage. We have an EMA cross sign over here. We have extreme price weakness indicated by this red X. However, we don't have the confirmation because we're high above the baseline. This diamond is invalidated almost instantly following the second candle. So my rule is to wait at least 2-3 candles to see if you can enter the short. Ideally, if you want to play it safe. Sure, you'll gamble less and you'll probably make less money, but it'll be a more secure, long-term profitable game that you play. Here we can see that we have a GPS signal and we're below the baseline. However, we're thick in the green cloud. We have the confirmation over here. This little green square is telling us that this is probably a place that you want to enter. Again, we're just demonstrating how MarketSpy ARmageddon deals with price action, how it interprets it, and how you have the tools to understand that this is probably nothing to worry about. You're in the green. and you're okay. So as soon as you broke above our baseline 2, we are already above baseline, baseline 1, we are above baseline 2, and the cloud is in the green. This is probably a long opportunity here. Okay, right on this candle, on the retrace, and probably on the MSX long over here. Since again, we're looking at money flow and we're starting to see that we've just transitioned into the green. So this is a nice little uptick in volume that we're having. We're looking at these candles over here. We can see like massive, we broke through the baseline with massive volume, and this is a good sign of continuation. Okay, the red diamond or the cipher diamond, we like to call them, are tricky to interpret. They happen on these failed reversal attempts on the waves when we're just about to cross the zero line, but then we go down again. So it's a fake out, and it's a pretty good signal to trade. But then again, just prior to that, you had these two buy signals. And what I like to do on MSX usually is I go to oversold level 1 and I enter 80, just to make sure that I have a stronger reliable signal. In this case, we filter out the threshold and set it to 80. So an extremely oversold condition is right over here on this GPS dot, and what a beautiful trade to take. If you keep it on default by 60, which is okay for some markets, but like I said, for every different market you should customize it and see what works for you. I keep it at 80. Minus 80 works perfectly for me, and it will for you too. Again, yellow X, these squares are not long signals. They're merely here to remind you that there's a reversal attempt and you should probably take some of your money off the table. So if you're shorting off of this white diamond, which, how do we know if this is a reliable signal? Because when it happened, we completely had the EMA cross, the price weakness action, all in one sign. We went below our baseline 2, entered a green cloud, red cloud, EMA ribbon turned to yellow, and we have our blue down facing triangle telling us that we have just broken below our baseline. So this is a baseline drop in combination with everything else. Momentum's going down. You know that this is a good place to trade, especially because of how sharp it was. All right, let's keep moving along. Over here, do we take this trade? Absolutely. We are below our baseline. We have the yellow flag, which tells us to get out from this long. If we longed over here on this signal, which we shouldn't be doing because we're not allowed to long, period. Under this baseline, it's not happening. Not for me. We're completely in the red. Catching a knife here, not a good idea. But waiting for something concrete, such as like this signal, is perfectly fine. It's perfectly fine. Nice, another 1%. So moving along on the 4-hour beast pair, we have another signal over here. Again, same exact reason I would have taken this trade over here, I would do the same here. As a matter of fact, if you entered on this one here and you kept seeing the rest of these signs, you should probably hold your position and not jump out of the trade preliminary. What about these little signals over here? When we have the red X, when we have this over here, notice how we're dropping, but we keep bouncing off of this baseline. And once we finally break, what I tell myself most of the time is that it's too far away from the initial signal. It's too far away. Like, yeah, what if it happened over here? This is not valid. I just lost all of this, and I'm not willing to risk it anymore because these signals happen very early, but the baseline drop happened later, few candles later. This is not a reliable signal when you have like a separation of that degree happening here. Compare this signal, for example, with a bunch of these signals. They are correct, but they're not as efficient. You pass on these. You definitely pass on here, because like I said, there's nothing. RSI is high, and it's better to wait until you get a diamond or something. No diamond over here yet. What a great opportunity to take a trade. However, we're not seeing anything. What do we do in this case? Well, in this case, we have a confluence here. We have two signals acting together. The EMA break. We have the PA price weakness, red X. We have sell pressure over here, indicated by this red shuriken. Then we have the baseline drop, and we're finally in the yellow, in the red cloud, below all of our baselines over here. And now you're far away from these signals, and you're thinking to yourself, okay, should I continue? And then you see like this little cross thingy happening, and then you see a red one, and we continue on our way down. I would probably take this trade if I saw this yellow X at the end of this, because this is a continuation signal, as discussed previously. A continuation signal gives me confidence, especially if we're below all of our baselines, that this is this is a green signal. I can continue from here. Another X will allow me to hold it further, and if I get stopped out, so what? Broke even. We don't have any signals here. Clearly, this is a nice little strong trend off of this GPS signal right here. Bought the bottom, got the green square confirmation. Would have been a nice way to exit a short from way over here, but as it stands, we're entering along and we're continuing, even though it's also not an ideal place. Why? Because below the baseline. Again, this yellow is the short that we can take over here on this diamond is okay. Dangerous, because we're still sandwiched between baseline 1 and baseline 2. However, if you have VWAP and baseline 1 above versus this one green cloud here, then I think we should be okay. We should be okay to take this trade. Let's see, yellow X probably yes, over here. Enter the continuation. We have a confluence of signals. Everything is below it. As soon as we drop below these average lines, by default, the way it's configured now is perfectly safe to trust it. And we go further down and further down and further down. That's a nice little drop, even though we had no diamond or any of that stuff going on here at the top. This is also okay. These signals are all perfectly fine, short signals. This signal, yellow X below the baseline, is okay, I would say, but this would have been a losing trade unless you took your money out very fast. You would be knocked out, stopped out from here, because as often seen in markets, price will reverse, go up, knock you out, and then come back down. This is exactly what happened here. This diamond, is it okay to take this trade? Absolutely. Below the baseline, price actually hit it. It acts as a ceiling now. Usually that's what it does. It acts as a ceiling. You see a signal over here. Take it. Why not? You have a nice little 1% to gain from this price action here. And this signal, is it okay to take this signal? Honestly, on paper, it looks like it is okay, but I would not have touched this because above the baseline. And usually what happens is that when you're way high up there, some of the best trades that you get is when you actually front run this crossing over here, is when you actually start early. And it's tempting, I know, but it's better to be consistent rather than jumping on the signal saying, okay, because you will know the top, you will know the peak when we're above all of these lines. That's the only way you can know that we're at the top. It'll be a bullish momentum, and suddenly you'll get a better signal, and off we go. But I say stay away from those. It doesn't matter if you miss the top. I always say that Do not jump on reversals because you're gonna get burned. Most traders get burned on trying to time the markets instead of investing time in the markets, if that makes sense. I think many would agree. These little signals over here, so the diamond is not present, that's fine. That's fine. These are okay. We're in the red cloud. When there's a degree of separation this wide, it's probably fine to wait for our baseline to confirm, and enter on this baseline drop and the yellow X continuation as we fall below the purple VWAP line. Another 2%, or let's be conservative and say all the way to here, another 1%. Okay, we took this range. Very nice. And following the GPS signal, entering the green, we see the little square over here. I think this would have been a nice little long opportunity as well, all the way up to this yellow flag. Sure. So I wanted to quickly demonstrate how you can read these and confirm, filter out the noise. Now, the problem with integrating this into sort of like an automatic environment where the signals appear and disappear for you is we can say that, you know, if the price action is trending below these lines, then it's okay to print these signals. If it's above, then it's not okay. But in certain cases, I think that you need to use your discretion and basically sniff out these moments of opportunities, because they may happen like this one, for example, over here. It could happen, the signal would not print, and then you're missing all of that. So people who wanted to have more frequent printing of these signals now have it. We don't have any here. EMA crosses, that's fine. As long as we're above our aqua baseline, it's a lifesaver. We're fine. Look at that. As long as we're above it, nothing can touch us. Nothing can touch us. As a matter of fact, you can use it as a trailing stop as well, if you so wish to do. I don't recommend it, but it can work. White diamond, red diamond, these are all short indications, but again, you have to be below the baseline. It has to be yellow, and baseline 2 has to be red. If this is not working for you in this particular market, what you can do is you can change your baseline to, let's say, LSMA. It's pretty good. And there you have it. Now you have a much better accurate reading. So configure your Armageddon to fit the market space. And if I don't want to see these EMA crosses, for example, if they get in my way and distract me, I can easily go to style. This is the reason why you have all this here. You can go to style and you can go danger, disable yellow X's, so they appear over here, disappear. There you go. Here's another one flashing over at the top. Look here. You can keep them, or you can disable them. You can disable the shuriken, red pressure, sell pressure, red shuriken over here. And disable that. Moving average, cross down, yellow, these bastards over here. Get rid of them. They happen too frequently. Red X, PA weakness, price action weakness. I like to keep them on because I want to see areas. It doesn't usually come, and the price doesn't start falling right as they happen, but it gives you like the area in the vicinity of this. The price action here is starting to act up a little bit. So I like to keep the momentum interruption. Those are white X's. I also like to keep them just because I know that once we have them printed, it's a very dangerous area to hold. It's telling me to enter and exit very quickly, because what can happen here is either we go all the way down a bit more, or we can instantly reverse, like in these two cases. The blood diamond, check conditions to short. Those are just heads up. Mainly it's a signal from MSX, which you can already find down here. The take money, I like that. I keep those squares in. The flags, I want the flags. I want to get out of my trades as fast as I can in volatile markets. My goal is not to hold. We're not trading stocks here or anything like that. Blue triangle, baseline drop. I like to have them on because sometimes you just can't see where the price is, whether it's trading below or above the baseline, our aqua blue and yellow baseline. So the rest of it can stay. And so I just cleaned up my chart. I kept my precious white diamonds over here because I know when I'm in the red cloud below the baseline, right over here, I can take a trade. I can hold it for a little bit. It can wiggle, but place my stop above here or right at my entry. And if I get stopped out, so what? I just lose the trading fees. Nothing major. And as a matter of fact, now that you can go to Ameritrade, E-Trade, Charles Schwab and all those banks, and you can have feeless trading experience, I think market buying and selling on these signals will make you a lot of money. Seriously, they don't know that there's MarketSpy ARmageddon and we can quickly execute these trades flawlessly without having to rely on breaking even or like making up for the prices that we pay in terms of fees, and the fee structure is gone. Over here, what's going on over here? Again, below baseline, below the VWAP, looks like a nice little short, but this second baseline configured for this market, yeah, so we have this least squares moving average. This is set by the industry standard 56 days, 56 periods, and it works wonderfully. And you can see that we're here in the green. And yeah, if you use this confluence, if you didn't have this before and you took this trade, you would have been knocked out of it for sure, even though we're below the baseline. But there's another factor, and that factor is we have been on a sell-off for quite a while with some major sell signals at these points, which are all perfectly fine. They're correct. This range over here, and then finally the blood diamond over here, another blood diamond, the diamond cluster over here, the white diamonds crushing the price action over here, eventually suppressing it and bringing us down, all while trading below our baseline, starting from even here, like at the beginning of this whole chop. This sideways action, we knew was gonna go down if you use this for confluence. Before the update, we did not have it, and it's magical. It looks very simple, but this newly added cloud can give you a configuration to filter out through the noise. While you can't get rid of the actual signals and the symbols that are being printed, you can see that if ARmageddon is making the right decision by showing them here, considering that you have something to support your thesis and saying that we might bounce off of here and go up, which we did. So if you took your time and waited a little bit, maybe 3 candles deep, and when you saw that this candle kind of like, plus there's like a little bit of volume starting to come in, right? You knew that this would not be a good trade. So I suggest you set your alarms on candle close for extremely accurate results, and you just chill. You wait. These flags are for you to... It is very simple. You see these little dots over here on MSX? When these dots happen, these flags print with a few of other parameters, so they would not print over here, for example, at the bottom. But these flags happen frequently, and they're just a reminder for you that, hey, every new level, every new peak that we reach, you should be taking some profit along the way. Trust me, it's healthy. Another signal right over here below the baseline, trending down. This is a losing trade 100%. Even though the diamond printed, I'm not gonna lie, you place your stop right above it. Everything everything was in your favor to short it here, but you got stopped out, knocked out. There's some weird price action going on here, and of course you can't always win and take it home. And would you continue waiting to short here? No, I think you should have longed over here, because volume bars are huge. And I think even though MSX doesn't show you a green pulse signal, you can enter on these C dots crossing up in combination with volume readings. So what else can we learn from this? Is that the signal sometimes may not appear at all at the top over here, but you don't need to have these diamonds there all the time, as long as you are paying attention to these moving averages that we have here in place, our baseline, the VWAP, very important, the VWAP. And yeah, so one more thing that you can do is to identify levels of where the price may stagger. You can go to show SMA ribbon, optional, the 200 moving average. You can activate it, and this 200 moving average is one of my favorites, because I like being patient, and usually when it comes, it hits it, fakes it out, comes back, and it's really pesky. It's always in the way of price action. The 200 moving average can act as a support or resistance in both cases, perfectly seen across all markets. If you activate it, that's why we have it in this thick orange line, just to give you an idea of what is most likely going to happen once we reach this line, the moving average from whichever direction. These are all tradable signals. Below, 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 you take profit on these shorts. However, your trend direction should also be identified. Like, what's going on over here? Is that a short? This is definitely a short, but how long do you hold it? So if you didn't have the 200 moving average activated over here at the show SMA ribbon, then you would think that we could potentially, from this seemingly bearish channel, ascending channel, we could drop further down. But the invisible forces at play, such as the 200-day moving average, was there to tell you that it will not let this happen. So you would probably exit. You would place your limit order to pick you up and remove you out of this position at this line or just slightly above it. Right. Blood diamond again. What about this one over here? Losing trade, right? Well, you kind of shorted it while in the green. In this case, it would have been better to take the red diamond. And what's the difference between these two? Well, I would say that the white diamonds are more accurate. They're also more frequent, presenting you with plenty of opportunities to find perfect short signals. However, they must be backed by MSX and as well as our baselines. They're here for a reason. Over here, this is a good short. This is a good short. Short-lived. No pun intended, but nevertheless, a good short for 1.5%, 1.3%. So reading this becomes very easy if you allow oh, look at this, look at it. This is the infamous side chop, the no trade zone. You see price action go like this, up and down, up and down, up and down. But we can learn something here as well, and that is, notice how we're here above the baseline for the most part. Look at it. We'll trace it. And it's all blue until here. So as long as we're above it, we ignore these short signals. We know we're going to keep ranging a little higher, reaching new grounds, taking money on these flags along the way. The beautiful thing is that they happen not on these like big drops down where it just wipes out all your previous gains, but as soon as there's a crossover, they show up, and so it's really healthy to take out some profit at these candles. And then we finally have this diamond, and we're way below the baseline. And in this range, what do? Well, we probably should keep the position open because we're below the baseline. Look, a perfect ceiling is in the making. We're hitting the ceiling, These baseline drops keep us suppressed until here. We drop down, suddenly a spike. You take profit along the way, another 1%. So Forex 1%, that is healthy. That is really nice. That is really nice. All right, so undisputed accuracy is there. It is your job to filter out the noise, because no matter what, the indications that we have are probably some of the best in the industry. There's no other indicator that will show you such frequent opportunities, and as noisy as it can get on all these time frames, you have powerful tools to filter out and make human decisions. A bot would wreck you trading on these ABC points. Any indicator, that's why like 3 commas and everything else, nothing beats discretionary trading. That's very important. I think, in my opinion, it's the best trading is manual trading. And heck, you can go and listen to some of the podcasts out there and hear some professional traders, prop traders, talk about how they're still pushing buttons, they're still deciding when, because human eyes just, you know, that's where the beauty is. So very, very profitable opportunities to go long and short. And if we look at MSX, for example, look at this. We have a GPS, but way below all the baselines. I've said it in my first video that I published on this channel. I said we're not allowed to long. And sometimes it can be irritating, it can be tricky. But this is what traders mean when they say, hey, once we go like 3, 4, 5% up, you know, and get a confirmation, then I'm longing. For a lot of beginners, this doesn't make any sense because they think, wouldn't the price be too high at that point? Wouldn't people be like selling? If it go like if Bitcoin jumps up $500, $1,000, wouldn't that mean like that would be the top and everybody would be saying no? FOMO. People start putting more money, they start adding to their winners, and price keeps going and going and going, and there's no catching up with it. So it's better to wait once we break out above these baselines and continue on our way. Very powerful stuff. I hope you employ this in your trading, and like I said, this can be very profitable if you only pay attention to what is truly happening with MSX and Armageddon and baselines, these newly added lines. This is the only thing that I wanted to keep your attention on in this session, in this video, is because I want you to understand how powerful this stuff is. If it doesn't make any sense, for example, you're like, why is it you know, over here we start to look bearish all of a sudden? Why? I want this to happen a bit later. You can simply go to your MarketSpy Armageddon, keep the default baseline to length to 56 days, 56 periods, go to volume weighted moving average, for example, click it, and there you have a nice little trend line based on volume. And as long as we're in the green on the bar, check it out, the money flow coincides, it's in confluence with this volume weighted moving averages of 56 periods. This is a clear trend. Once we're above it over here, above the 200 daily moving average, this is your entry point. Not catching the bottom, looking at MSX and saying that we're about to reverse, I wanted to make a few pips over here and exit. Why would you do that? Let us come back above baseline 1, baseline 2, the volume weighted moving average. Let us come back about a candle higher and close there above the 200 moving average, and then let's continue on our way up, and you can enter somewhere over here on a little retrace because it will most likely go on. Here, clear trend, all red, all red, all red. Is just that you have to take profit along the way. If you're extremely paranoid and you're starting to feel like price is starting to tap the baseline and then the squeeze is happening over here, you can exit right away, market sell, or even on these dots, on the C dot crossing up, you can take some profit every time the C dot crosses up. If you take 10% on each one of these, I think that would be really nice. So you don't have to get trapped in this. And of course, our Confluence tab, I always consult with my Confluence tab when I look at this for super confirmation. When it's green like this, I have no worries. I'm not taking my money out of this market unless I see some signals, a flag of sorts, which in this case on the 4 hour, we might see something get printed over here soon. But until then, I'm holding it. Look how high above the baseline we are. We'll probably continue on the way up. So again, volume weighted moving average for this particular market, as you can see, works wonderfully. And if it worked in the past, people say that, you know, past history, past price action does not reflect the future. It is true, but the way the price, the way it interacts with our moving averages is equally important, because markets have memories, and because of that, they will most likely repeat the same thing again. Look at this. Look at the top of this diamond, down below at this diamond. If you had entered here and held, because we were clearly below in a downtrend, bleeding red, volume weighted moving average is also closely connected to our VWAP. They're pretty much one and the same. So that purple line is still there for you. It's just that this way you clearly know your trend. Our trader on Discord, Crypto Master, was looking for something that would confirm the trend, and I think you can use the new baseline 2, very powerful actionable baseline, to confirm your trends very easily. Look how closely it follows the price action and how it changes the colors whenever there is a trend reversal. This diamond is a losing trade if you took it, and you would probably take it, but given that we had 3 of them at the top here and we had all of this given to us by the market, this would just be greedy. If you're a latecomer and you missed all that and you think this is going to continue even on this diamond, probably not, because markets move in zigzags. So if you saw this, down, up, down, it's always the same thing. That is all. I wanted to show you how powerful this can be in your trading, and how at first glance you might see things like that and be like, oh, it's inaccurate. Actually, it is very accurate. It is doing what the market is doing, and it's showing you firsthand before anything else happens. It gives you an edge. Traders talk about what's your edge. Tell them it's Armageddon. Thank you for watching. We'll cover a lot more, but this is for the recent users who have acquired MarketSpy Trading Suite and just wanted to know what the signals are all about and how to properly read them, and how to, most importantly, filter out the noise. This was demonstrated on a very volatile, unpredictable pair called the Dragon, the British pound and the Japanese yen. You need to be a complete pro trading this, or you just need to own MarketSpy and you will get away with it, guaranteed. Guaranteed. We see nothing but accuracy across these screens, and if you go to stuff like crypto, good luck reporting all your taxes. That's all I can say, because you're gonna make some moolah. Watch the Christmas tree, and don't be afraid to exit early if you have to take profit, because that's all that matters. Net gains, guys, net gains. I'll talk to you in the next video. Thank you so much, and we'll do some Bitcoin price action analysis later this evening. Thank you.